Hi, welcome to Market Alert for Monday, the 29th of June 2020. So stocks and bond yields plunge on Friday on COVID surge and Fed balance sheet purge. What they mean by the Fed balance sheet purge is that they didn't really add anything to it during last week. And if you've been in the markets for long enough, you'll know back in 2018, as soon as the Fed stops buying all of the toxic instruments, ETFs, and all the other stuff, bad debt, corporate debt, etc., then this is what's supporting the stock market. So again, this is added to the fact that there's the fear of the second wave of COVID along with this. It's like it's a controlled demolition, to be honest with you, and we're just watching it happen in slow motion. So that's Friday. Let it go, and it is going to go to the downside. There's no doubts about that. We'll look at that in more detail in the daily chart a bit later on. But first, let's start off by looking at the trades from Friday. We start off here with a real-time example in the DAX. This is the opening of the session. You can see it's volatile. And what I'm looking at here is the sort of resistance levels, because we've got the weakness in the background. Even from 7 a.m. prices move lower, and then we've got the 200 bar moving average in the way, like I say, the close from the previous day, and also seeing some red selling coming in as the market tries to move higher. Also note, when this bar moved up, it ran straight into the 200 bar moving average as well. So as each of these bars is drawn, I'm looking to see where I can spot the resistance and support, and then make a judgment. Also notice now that prices are trading below the psychological level, but we know there was some support here in the green bars as well. So we know we've got to break this area in order for prices to move lower. So I'm going to fast forward. We get a potential sell signal there, but the market reverses, comes back above the psychological level there. And I'm going to move forward through this a bit more. I'm just setting up here to actually take advantage of the trade. Now I'm presented with a bit of a dilemma, because I've got two options here. It could go to the buy side, it could go to the sell side. So I just have to be prepared for this. This is very difficult to execute, because obviously of the volatility first thing in the morning. So I'll show you how it unfolds in a moment. Now I actually handled it. So we've got prices closing back below the psychological level there, even though there was some buying in the previous bar. And again, I'm just going to fast forward. And now you can see that the sell side is being hit, and prices are moving lower. I'm not in the trade yet. I thought, well, okay, as it's first thing in the morning, we're likely to get a bounce back towards the psychological level. And that's precisely what happened here. So I'm just going to redraw up the trade. And you see I've got plenty of time as I make this decision. And then you will see the order being executed there. So I've actually bought in higher than I actually would, because of the volatility that you get first thing. Now, this doesn't always work in your favor, because if the market's moving fast, it can go straight through and it doesn't bounce back. Well, most times it will actually bounce, because that's the nature of the way prices actually work. So from this point forward, I'm in the trade. I have the stop in place, and there I can see I've got some buying coming back in, which is what I would have expected. There's some green inside of the red bar, and that just shows that they're trying to bring the prices back. The comforting thing is I've got the 200 MA, I've got the 20 bar moving average, the 5 bar, and the psychological level there as a resistance if prices do attempt to move back to the upside. Fortunately, they continue to the downside, and then they drive through the scalp. And at this point, you can see that I've moved the stop to break even as we've gone 20 points. So I've dragged the stop down. I'll just rewind this so you can hopefully see this. The trouble is, there's a lot in the video when it's very difficult to do this. So you'll see the stop being dragged down there to break even, because we've got more or less 20 points on the table, and we're driving through. And that's the key. I'm always looking for the market to drive through the scalp, the first profit target. If it doesn't, then I have to make the decision on whether I take the profits off the table or stick with it and risk the 1% on the trade. But again, fortunately, the market drove lower. You can see strong bar there, and look at the volume. Now I've got a red bar inside of a red bar. That's selling. That's what I want to see. But my next obstacle is to get through the BRN here. I need to see this same sort of selling driving through this area. So prices are now oscillating, and then they start to move lower to the BRN. And again, I can see that selling, but I still need to break through here in order for prices to move lower. So now I can see they're starting to get a bit of support at this level. So I'm just going to fast forward, and you can see that the selling's disappeared as well because the volume has dropped off. So my chances of breaking through this are becoming slightly less unless somebody comes in and then hits the market with a sell order to drive through this level. And here you'll see prices now being driven through this, and at the same time I've moved the stop down to above, following the 5-bar moving average, just to lock in the profits. It's first thing in the morning, the markets can soon whip around, and like I say, the volume has also dropped off on the selling side as well. So prices come back through, they start to move lower, and now I'm watching the volume and I can see it building very, very quickly. And you can see now there's here you've got very high volume, and the market is moving back to the upside, and the range of this bar, the current bar that's being drawn, is less in range than the previous bar. And if the volume's greater, I know they're actually buying at this level, which is why, again, move the stop down. So I'm managing the trade based upon what I actually see, and then you'll see me actually getting stopped out at that level just here over on the right, on the left-hand side there. So as the prices came back, that's exactly what happened. And we know that, you can see here, preempting the buying that was coming into the market by looking at both the price action and the volume there. And then prices closing back above the BRN as well. So it was the right decision to make at that time. And all I did was read the price bars as the market moved lower. And that is how I manage the trade in real time as it unfolds. And it's something you'll get used to, and it's not that difficult at all to actually understand what's going on in each price bar, and it actually becomes highly addictive actually, because you start to preempt what the market's likely to do. So if I just move back here, and like I say, you can see here now the volume is greater in this bar than the previous bars, and we'd already established that the selling had disappeared because we weren't getting the red bars that we had before. So again, it's just a logical approach to actually trading, and just identifying what's going on, applying that logic to it. Okay, so that's the trade for Friday morning. Let's move on to Friday afternoon. So just before the start of the Dow Jones, obviously this is the DAX, we saw prices an hour before breaking through the 200 bar MA with some selling. And this is something that I do. I don't just start at 2:30. I actually have a look, see what's gone on in the last hour, establish where I am, see whether there's weakness, whether there's strength in the market, knowing full well, if you've watched the Market Alert for a long time, that we tend to get a sell-off at the open in the Dow more often than we do buying. And the reason for that is because the futures prices have been ramped up in the pre-market session on the Dow Jones. And then when the cash market opens, those who are wishing to offload their shares use those higher prices that have been brought up by the futures market to then sell into. So the fact is, we've got all of this selling that's taken place here. You can see them, the shorts getting out of their trade with this green bar. The green bar inside of the red bar shows either profit taking or new buying. And here you can see prices trading back up to the BRN. They stay below the 20 bar moving average, and everything is red pointing to the downside. And this is not too dissimilar from what we saw in Thursday's market alert when I looked at Wednesday's trading. Now the market opens and it's volatile, but everything remains red. Now, unfortunately, I missed this trade. I was on the phone at the time and not present. And when I came back, I was pig sick, because if you look back at Wednesday's market alert, you will see how I marked the trade up, even though there's no signal, because we're already red. And in order to get a signal to turn back to the short side, we need to see some green. We didn't get any green. So here we've got at the opening of the session, it's volatile, but it's red. And we've got clues already that we've had some weakness in the background. And the Dow generally sells off at the beginning of the session. Plus the new thing with COVID now allegedly coming back, second wave. And this just sent the market to the downside. So I haven't marked this up, which you can see here. But you'll notice, again, as we saw in the first part of the morning session, prices attempted to come back. I've got resistance of the 20 bar moving average, resistance of the BRN, and up here I've also got the 200 bar moving average. I also have something else as well, and that's the high of this bar, because as prices open, they were hit with selling and will move lower, and the volume is high. Now, the reason this doesn't show as red is because the price action doesn't meet a certain criteria that I'm looking for to show this, but you can see that the volume is high and way above the average there. So short from the open, prices start to move low, and you can see how the attempt to bring it back with these green bars, this is just the battle that's going on. But again, if you notice, the high of this bar is not as high as this bar. It also doesn't close above the BRN or the 20 bar moving average. And then prices move lower. And you'll see there now we've got down to the DP level. Now the daily pivot, if prices are above, then the theory is that prices will move, continue to move to the upside. If they break below, then they will move to the downside. And we've just reached this point and this psychological level. And again, you can see very high volume as the market tries to come back at this time. Prices still remain below the 5 bar moving average as well. So if you were short on this, as long as the prices are remaining below the 5 bar moving average, then it will remain short. So now you can see how when it drove through this psychological level, it came back straight back to the DP, the volume high as well. So what this is saying is we don't want to move lower. We're trying to hold the market at this level. So prices then bounce again above the DP, but then all of a sudden you can see that we end up in this sideways move. There's a battle going on, and eventually we break to the downside. Now we can see prices coming back to the close above the 5 bar moving average. And had I have been in this trade, that would have been the point where I would have been considering locking in profits. And I can also see at this level that prices were starting to find that support, which we spoke about a few moments ago. But then we didn't get any buy signals. The market did manage to break. And you'll see prices continuing to move to the downside there, until we see buying coming back into the market to support prices. So there you go. There was no other signals on Friday afternoon, which is a shame. And one thing that I have been working on is these sorts of areas here where we can actually re-enter the market. And if the price bars remain red, they fail to close above the 20 bar moving average, and they close back below the 5 bar, then there's a good chance that the market will move lower. And certainly going forward, with the weakness that is starting to develop in the markets, this is definitely going to be a high probability of this actually happening. Okay, let's have a quick look at the overnight markets and where they traded during Friday's session. Okay, so now we've looked at the details of Friday's trade. Let's have a look at the bigger picture and see where we are. This is the German Dax Daily. We can see that we've got red for Friday. Prices have closed below the 200 bar moving average. I've also drawn in the fibs from this low to this high and projected back down to here, and you can see that the overnight market has already traded down to the 62%. If markets are going to move lower, which I suspect that they are, then all of these three levels are important, the 78 and the 89, and a failure to find support at the 89 level, we'll see prices retest the low. And if we break the low that we saw in May, then we start drawing fibs from this level as prices move lower. So there's the bigger picture of the DAX, and the reason for the weakness is quite simple. So as it says here, any hope for a V-shaped recovery has been completely crushed. A V-shaped recovery is basically this. The global economy was shut down, and they were expecting the economy to shoot straight back to where it was, which is complete and utter twilight zone thinking, frankly. Never in the history of the shut down the global economy before. This is a testing ground now to see what happens. I can tell you what happens. You end up with the greatest depression ever. That's what you end up with. As the V-shaped narrative dies, as commercial real estate bust accelerates, get everybody working from home. What do you do with the commercial properties? What happens? Simple as that. And again, 41% of businesses on Yelp have permanently closed as V-shape recovery implodes. And the more this narrative goes on, the more you're going to see the likes of this moving to the downside and back to the lows that we had in March. This is the sort of the dead cat bounce, as it were, and it's not looking good. It's as simple as that. So what is the Fed going to do next? They've already reduced rates. They've printed trillions. What can they do? Negative rates? I suspect so, but they'll just come up with another scheme to keep printing and feeding the machine. There's no doubt about that. This week is a short week, as we've got, we'll go down to Friday. We've got the Independence Day celebrations this coming weekend, so the US is shut on Friday. And also the non-farm payrolls have moved to Thursday for this week as well, so keep this one in mind. The ADP is still on Wednesday. What's interesting is that all of the central bank announcements now have become medium impact, which is really bizarre. I don't know why, apart from Powell here, but as you'll see here, Bailey he's been downgraded. It could do with being sacked, but he's currently downgraded to a medium impact news item, which is really odd. So things have changed for the next week. As we head towards the end of the week, the news items aren't on the normal days, in particular the non-farm payroll numbers. So keep this in mind as well. Today, 10:30, you've got Bailey speaking. I don't know what he's going to be speaking about or who he's speaking to, but he's been downgraded to medium impact. So have a quick look at the Dow before we finish, because this is obviously leading, and you can see in the daily chart as well, prices trading down towards the 89%. Prices have gapped down on the open of the overnight trade, which you can see here, creating a gap, and this gap has now been filled. It got filled quite soon, and then prices have moved higher and then moved back once more as well. And you can see from this low to here, if you were to mark up the fib retracement, so from here up to here, you will see prices back at 78% there, and you see the green bars as well at this level. But prices are struggling to move higher. It's going to be an interesting one when the DAX opens at 8 a.m. Okay, that will do it for this one. I've gone on long enough. Let's see what happens today. I expect the volatility to continue to increase. Okay, that's it for this. As ever, thanks for watching. See you in the next one.